More Americans are struggling to make their car payments. The most recent data from Cox Automotive, the largest automotive service organization, shows a 25% increase from last year in people 60 days past due on their car loans. But why? The data points to higher interest rates, Americans having to borrow more to buy an automobile, and inflation. So if you are in this situation or know someone who is, I asked a financial analyst what you should do.
We don't talk about the affordability in terms of how much you should be spending on a car very often, but we should, because of the fact that it can be so devastating to household budgets if you take on too much.
Greg McBride, Chief Financial Analyst at Bankrate.com.
They borrowed a lot at a time when auto prices were very, very high, but now that they've had that loan for a year or two, the value of that vehicle has fallen a lot faster than their loan balance. And so they're upside down in some cases by a significant margin, and that really handcuffs them in terms of their ability to do something about it.
If you're debating a new car, know that sticker prices are still up dramatically. McBride says the average car loan financed is $40,000, up $10,000 from before the pandemic. That puts monthly car payments at record highs. Nearly 15% of drivers who financed a new vehicle in the past 6 months are paying more than $1,000 a month.
To avoid getting into trouble, limit your auto payments to no more than 10% of your monthly income.
So if you're one of those borrowers paying $1,000 a month, your household income should be $10,000 a month.
Don't hide from this. If you're having trouble making the payments or you've already missed one, contact your lender, see what sort of arrangements might be able to be worked out. There's not a whole lot of latitude on missed car payments. If you miss more than one or two, it's not going to be in the driveway in the morning.
Exactly. Now, credit is tightening, but McBride says lending is not going to stop. Lenders will be more focused on borrowers who have a credit score of 680 or better. If your credit score is 620 or below, you'll have less favorable terms like a higher down payment requirement or less generous approval amounts overall. So do shop around. McBride says there's a very wide disparity of what different lenders charge. And keep in mind, we still have a very strong labor economy out there. So maybe get some gig work, a side hustle in order to keep up with those payments. Tomorrow on Daybreak, Suzanne Bruner will have more updates on the car market. Despite higher interest rates, is it a good time to buy? She's going to share those numbers with you at 6:50 on Daybreak.